Good morning, everyone. I'm Barbara. Thanks for joining us today. We're going to go through a few slides and then we are going to open up the floor to your questions. You are on mute, but you can chat your questions in the box in the bottom right-hand corner of the screen. The questions are in moderated mode to protect your privacy. The event board in the top right-hand of the screen is where you can find our slides from today's event under shared files, and there are also dialing instructions if you're having trouble with the audio. We do recommend Google Chrome as the browser of choice for your best experience. Within 24 hours, you will receive a follow-up email linking to the recording and any slides from today. If you have questions, please reach out to me at marketing@threadhcm.com. And with that, I'll turn it over to Lori.
Good morning, everybody. Thank you so much for attending our next town hall. There's been a few changes and to especially the loan forgiveness, the PPP forgiveness. So I should have, instead of titling this Thread Connects, we should have a reality TV show. And instead of keeping up with the Kardashians, I think we're now keeping up with the PPP. So that's how I feel right now. It keeps changing. And we want to keep you guys abreast of everything that's happening. And so we felt like this was important to have this happen today. So agenda, we're going to go just a very quick extension overview of the PPP. Most people, we've already done a town hall on this, so I'll spend 1 second on it. A little bit about the new application for forgiveness changes. We're going to do a quick overview of what it means for $100,000 employee wages, a little bit around the changes on owner compensation. There's been some changes around that, some clarifications. I'm going to go a little bit over the FTE reductions in Safe Harbor. We're going to quickly talk about the iSolved enhancements. That'll be 30 seconds maybe. And then Scott has a little bit, he is going to update everybody on the HR support side of what's going on. So hopefully everybody can hear me. I see a couple people, but that's always kind of the case. There's always a couple issues. If you have issues, you can call in, but hopefully everybody can hear me. Quick disclaimer, obviously this stuff keeps changing. So this is based on current SBA guidelines, and I've read the documentation directly from the SBA, and that's usually where I get my information from. I don't necessarily rely on other sites on Google. I look at the SBA guidance directly. So there's some interpretation here based on how I interpret this, but for the most part, this is what we know. So always consult your other professionals, legal and financial as well. So everybody knows that there was an extension of the PPP, and I just wanted to just quickly, in case we have new people on here that have not been on our town halls or haven't heard about the extensions, just want to make sure everybody knows what they are. So there was an extension to the covered period. You can choose between 8 and 24 weeks. There was an expansion of the percentage paid to non-payroll expenses. So you went from 25% to non-payroll expense to 40%, so that's good. There's an extension to restore full-time equivalent employees from June 30th to the end of the year, 12/31. And there was an extension to the loan payback for those that take some of this as a loan from 2 to 5 years. Now that is for loans after June 5th, it's automatic. The ones prior to that, you'll need to talk to your lender to verify. And then there's some exemptions, more exemptions for hiring issues that a lot of companies have dealt with. There was also an extension to the tax deferral, the employer Social Security tax. You can defer that even if you're going to get PPP forgiveness. You can defer that employer Social Security tax, 6.2%, through the end of this year, and then 50% paid at the end of 2021, 50% end of 2022. Payroll costs incurred and paid, and this is language that has been really confusing to everybody. For payroll costs, it's costs that are incurred and paid during the covered or alternative covered period. This means you could include a payroll that is incurred but not paid until the next pay date after the covered period ends, and that's okay. And then non-payroll costs were a little different. It said must be paid during the covered period or incurred and paid on the next billing date, even if the billing date is outside of the covered period. So there's some little nuances around when these need to be paid. But for the most part, it's fairly simple. And I think the goal here is for the majority of companies to get full forgiveness. So a lot of flexibility now. All right, there have been two new forms created. One is a simplified full forgiveness application. This really is not super simplified because I've looked through it and I went through the original form. This is basically the same form minus the instructions. So it went from 11 to 5 pages. There's a few differences in it, but for the most part, the application itself is just as complicated. But the instructions have been taken out. They're in a separate document. In here, they have given the language around the 8 or 24 week options. So that has been a change. It also includes the 60% payroll, 40% non-payroll. There's not much different in this application other than those items. The biggest change is the new easy form. And I'm sure hoping that a large percentage of companies out there can fill out the easy form because it's basically 2 pages. And the new easy form is available though for 3 specific circumstances. If you're self-employed or have no employees, you can automatically use the new easy form. If you had no drop in wages by more than 25% and did not drop your number of FTEs, so companies that did not have to have any layoffs and did not drop wages by more than 25% can also use the new easy form. Then there's also those that experience reductions in business activity as a result of health directives related to COVID-19. So if you were partially shut down, you're a restaurant, and up until, who knows when, you have limited occupancy. That's an example. So if you were, but due to these directives, health directives, reduced in business activity and did not reduce salaries or wages by more than 25%, then you can also file for the new easy form. If you can find a way to do the new easy form, definitely do it. It's a lot easier, a lot less documentation required. Here's an example of it. It's basically, there's another page where you have to check a box as to, you've got to do your good faith, signatures. But for the most part, this is the application. So it's basically payroll costs, non-payroll costs, utility payments, and all of that type thing. What the loan amount is, making sure that you spend at least 60% on payroll, and then what your forgiveness amount is. So if you can use the easy form, definitely, I recommend it highly. If you did have a reduction in FTE, it's going to be, you're going to have to use the longer form. All right, a new thing, we talked about this last time on the $100,000 wage clarification. Now that you can choose a 24-week period, does that change the $100,000 wage? So it does for employees. So if you choose the 24 weeks, you have a maximum of $46,154 per individual. And I'm going to talk about the exception for owner employees in a second. If you choose the 8 weeks, you have a maximum of $15,385 per individual. So that has been clarified. You can use the larger amount if you choose the 24-week time period of $46,000 for non-owner employees. And then over and above that, you can use the covered benefits for the employees as well. There is also an exception on owner employees. So I'm going to talk about owner compensation. This has been a question for a lot of people. I had this question too, because before we assumed that the owner employees would follow the same rules, and now they have made clarifications, and I read this directly off of the SBA new interim final rule. So the maximum for the 8-week time period for an owner employee is $15,385. That's what we expected. But the maximum for the 24-week period is $20,833. So they basically have taken what your original loan amount was built off of. You used the 100,000 divided by 12 to come up with a monthly amount times 2.5. So remember, it was 250% of your payroll expense. That's where that $20,833 comes up with. So that does specifically help self-employed and owners with no employees, since before with the 8-week time period, they would only have been able to take $15,385. Now they can take $20,833. They're going to have a harder time being able to spend the full amount on payroll, and that will definitely help them. but the $20,833 is the cap for owner employees. The other thing that I did read is that $20,833 is across all entities. So they have made specific language in there that they do not want business owners padding their pockets with payroll. So in there it says the $20,833 would be across all owned entities. So that is in the language itself. The forgiveness also does not include health insurance premiums for the self-employed, general partner, or owner employees of S corporations. And this is in their language specifically because such payments are already included in their compensation. So, the S corporation W-2 insurance piece, that is part of your wages. And so the forgiveness will not include the health insurance premiums. There's also a language saying no retirement contributions for self-employed or general partners. They did not specifically talk about S Corp employees on that piece, so that's up for interpretation. Maybe that will be clarified. As of right now, I'm expecting, the way I would think of it is no owner-employee retirement contributions and no owner-employee health insurance contributions would be included in the forgiveness. The good and bad, we kind of included that when we were applying for the application for the itself. So now that they have changed this, you may have to go use that 24-week time period to be able to spend it on other payroll costs. So you have longer to spend it. That's the good news. I just wanted to quickly talk about the FTE Safe Harbor because there's so much now going around. They're giving you so much flexibility to restore your full-time equivalent number. And I talked about this in the last town hall, but I wanted to talk about the first part. So you can reduce your FTE requirement due to several different factors now. Did the employer make a written offer to rehire, but it was declined? That's one reason that you can reduce your FTE count. Did the employer make a written offer to restore hours and they were declined? Was an employee fired for cause? And of course, documented. All this needs to be documented. You're in some cases, you'll have to supply some of this documentation. In other cases, I think with the easy form, you just have to keep it on file and they may ask for it later. Did the employee voluntarily resign? Did the employee voluntarily request a reduction in hours? And I know we've got clients that I've talked to specifically and directly about this saying, hey, we've got people not wanting to work as much right now. So you'll be able to reduce your FTE number for those 5 specific reasons. And then the safe harbor is changed a little bit and become more flexible. So if employers were unable to operate at full capacity by the end of the covered period due to compliance with the CDC, Secretary of Health and Human Services, or OSHA. So if you were unable to be at full capacity, obviously you can't hire back all the same number of people. That will give you a safe harbor for the FTE count. The other safe harbor is if the employer did reduce its FTE count between February and April of February 15th and April 26, 2020, but restored its FTE by 12/31. So there's so much flexibility now in being able to restore the FTE headcount that I feel like there should be very little reason for companies not to be able to get the full forgiveness. And if you're a client of ours, we're going to help you get through that. We've got all the reporting. Every time a new change happens, the developers have to go tweak some things. But as the change happens, the reports become available. And my overall message to you guys is that you want to wait until until you really have to determine, and you want to run it both ways between the 8-week and the 24-week, and then make sure that you're able to get as much forgiveness as possible. And I'm going to go through the 8 versus 24 in a minute. All right, so real quick, I'm not really going to go through this slide, but this is about the forgiveness report that we have in iSolved. I would just recommend that you hold off and make sure that all these, that the reporting is done, that you look through the report and make sure that even if you decide to go with the 8 weeks, if you can get 100% forgiveness, then maybe you should do an 8-week. Here's what I put together real quick on which one is best for who. So 8-week. If you were able to stay fully staffed and you know that your FTE count is fine, you can do the easy form, you were able to stay fully staffed and not drop wages lower than 25%, then it could be worthwhile to do the 8-week application for forgiveness, because then that loan will now be off your books. If you need to go apply for other financial, if you need to go apply for a line of credit or other financial resources, that loan will be on your books until it's forgiven. So if you are able to get 100% forgiveness with how it is right now, then the 8-week is fine. You can apply for it. Hopefully you'll get it forgiven faster because you'll be on the early end. So I think that is a reason to go with the 8 weeks. If you needed more time to spend the money and you've got more money sitting out there than what could be used for payroll, especially, then you may want to go with the 24. If you you need more time, so say some companies made agreements with their landlords and they pushed out their rent, they made some agreements and pushed them out. If you need more time to be able to spend that money on non-payroll related eligible expenses, you may want to go for the 24-week. So we can go into more. I know there's a lot more questions on 8 versus 24, and I'll try to answer them as much as I can. But we're here to help with our forgiveness reports. We're going to be able to run them multiple ways, and you'll be able to see which way is going to be more beneficial for you. I did see that you have 10 months from the end of the covered period to apply for forgiveness, so you have time. We worked through SunTrust, Truist Bank, and they did send something out recently that said their application for forgiveness portal will be available in July. So I think some lenders are starting to get ready to be able to receive these, at least for the 8-week forgiveness applications. So with that, I'm going to turn it over to Scott for a few minutes, and then we'll come back and answer all your questions.
All right. Thanks, Lori. Wait, I'm moving backwards. Sorry about that. There we go. All right. So some of you may have read about this or heard about this in the news. There was a big landmark decision by the Supreme Court of the United States. And basically what they were determining is gender identity and sexual orientation included in the word sex in terms of what's covered by Title VII, which was the big 1964 Civil Rights Act that protected people from discrimination against groups by sex, age, race, things like that. Or age came later. But anyway, what they did is they just said, yes, that gender identity and sexual orientation are protected by the word sex in Title VII. Some folks debated that said when the law was written in 1964, the authors of that law did not anticipate this issue. But the Supreme Court said, we understand that, but if they did, they would have included it, kind of thing. So the LGBTQ, the lesbian, gay, bisexual, transgender, and the Q stands for questioning or queer, some people call it. And those groups are protected now by federal law. So that's something to think about. I know that this is a contested topic for some folks. Some people say, great, it's about time. And some folks, are challenged by this. But this is the world we live in now, as we're challenged sometimes by what's going on around us. And I think it's good personally that we include as many folks as we can. And we believe that diversity is good and helps us out. So the companies that have 15 or more employees are covered by this, Title VII. If you're wondering when do we start, just start now. Just go ahead and get ahead of this, get used to this. And there are going to be some things to think about. So look at your policies. If you need help, you can always call us for HR support. We do that as well as payroll. And we're working with multiple small businesses right now to revise their handbook policies, other policies, and specifically like the equal employment opportunity policy. You need to update those lists in there in each area of your handbook and other policies, your anti-harassment discrimination policies. If you have a dress code policy that says men have to do this and women have to do that, you probably need to look at that policy because, for example, if you have a transgender employee who is formerly man who identifies as a woman and wants to wear the women's clothes that are identified in your section, that section of the dress code, then you would probably need to accommodate that. So you need to be ready for issues like that, and you have questions about how to deal with situations like that, then feel free to reach out and we will help you through that. You also, once you've updated policies, will need to make sure you provided training to your employees so they understand, and then also to your supervisors and managers so they understand that the protections by the federal government under Title VII have been expanded. And so with that comes a little bit more awareness in the workplace and keeping your eye out for things that could get you in trouble, or beyond that, really make people who are protected by this law feel uncomfortable in any way. You just want to treat everybody the same and base employment decisions on performance. If you base every employment decision on performance alone, in terms of promotions, demotions, terminations, things like that, and you document that performance objectively, then that keeps you out of trouble with most protective employment laws. Okay, so if you have any questions about this, feel free to schedule time on my calendar and we can talk about it. This question has continued to be up front. So what happens when an employee refuses to return to work? Some of you are bringing employees back, and maybe the situation is a little bit different than what it was before, but you're offering to return them. And it's easy if somebody says, I'm not coming back, period, because then they've basically resigned their position, okay? I do think you need to document the offer. If it's people who are permanently laid off or new employees, document the offer always. If you're bringing people back from a furlough or a temporary layoff, you also want to send them a recall letter, and you want to document their response. So don't just show that you sent it, also get a signed and dated copy back. Email is okay, but the signed document and dated is even better. So in your letters, you should always include your safety measures. In other words, this is what we're doing to maintain a safe workplace. If you're doing testing, here's what we're doing. You can test temperatures. You can even require people to get the active COVID-19 test. You cannot require the antibody test. If you're testing for temperatures, you don't want to keep a log of, Scott's temperature on this day or anything like that. You just look at it, and if it's good, keep going to work. If it's not good, you tell Scott you need to go home, and then you could document, in the private record of Scott's file that Scott needed to go home because he was showing symptoms, something like that. Document your new expectations of employees, like you're going to be expected to clean your workspace, use hand sanitizer, things like that, social distancing, virtual meetings, however you're doing it. And then on that letter, you want to give them the option to either accept the terms or to deny their terms. If you deny the terms, then it basically says, okay, if you get no response or if you deny this, then we're assuming that you have resigned your position. Now, there's another option that you need to consider, and this is the tough spot. These are the folks who say, I do want to come back eventually, but I don't want to come back right now because I don't feel safe. And that puts you in a little bit of a gray area, but you want to make sure before you quickly respond to that you consider your options. Is this person in a high risk category according to the CDC, age-wise or health-wise? Is this person suffering from a disability that may require some kind of accommodation? So before you say, okay, you're fired or you're out, you almost need to have that conversation just for these folks who say, I just don't want to come back yet. So then you need to say, okay, if you're not in a high risk group, and you're not asking for any kind of disability accommodation, and even though we're taking all the safety requirements seriously and we're complying with the CDC and OSHA and everything else, you're just saying, I don't want to come back, I don't feel comfortable. Well, that's kind of the equivalent under normal circumstances of somebody just saying, look, I just don't feel comfortable coming to work. So you can deal with that as you need to. I would say talk to HR or your attorney before you send a termination letter to somebody in that position. But it is possible that you could come to that conclusion and be okay with it as long as you've taken the other steps first. Also, there's a little side note over here to the left of your slide that just lets you know that as of today, so far, the extra $600 in federal unemployment payments that people on state benefits are getting is still scheduled to end at the end of July. So based on pay periods and pay dates, that can be July 25th, July 27th. There's debate about whether or not that should be extended, but has not been extended yet. So as of now, that's going to end at the end of July. And then lastly, something I wanted to talk about is some of the ethical issues that are coming up with this new reality that we're all facing. One thing that HR people have said for years is you've got to be consistent. You've got to treat everybody the same. You know, y'all probably heard that if you ever dealt with HR folks. And now we're having to look at one size fits all might not fit all, because the fact that you have some people who are working from home or partially working from home, a lot of us have different situations in our house that we're dealing with, which means now you are also helping people navigate through. So consider individual circumstances as much as you can, be as objective as you can. I'm not saying you have to get out of control with things you wouldn't normally do, but you do need to be a little bit more empathetic during this time and consider what individual circumstances are, maybe even revise certain policies that are too broad or too strict. So consider that. Second thing is the urge to monitor more when you're feeling out of control. And I mentioned this briefly on a previous town hall. There's a huge surge right now in monitoring software, which is fine. A lot of software and programming companies have used this for years successfully, but it's going beyond what we've traditionally used to the point where there are software apps and things that are being downloaded on your phone. There's talk of monitoring software so that when I'm at my computer, the camera on my computer is taking a picture of me every 5 minutes to make sure I'm sitting here in front of my desk. The issue with that is, one, that people don't like it, so of course it may be legal at some point, but also where is the computer sitting when you have people working at home? Not everybody has a nice home office in their house. A lot of people are sitting at their kitchen table or standing up in an upstairs bedroom or something like that. And maybe they don't want their family being photographed every 5 minutes behind them in the kitchen, So you just got to think through some of these extra issues that come along with this stuff, and be careful not to overreach, because employees can become pretty resentful when they feel like they're being monitored due to a lack of trust. So if there's a lack of trust, I would say, and this is just Scott Mastley talking, I think that that's the issue that could be addressed first, is why is there a lack of trust there? Maybe there could be better metrics. Maybe there could be better management processes. Maybe you should have employees who you can trust. A lot of those issues are to be considered. Also, the third thing is choosing transparency over the spin. So I would say resist the urge to put a huge positive spin on every single thing that's happened, because sometimes there are some circumstances that we're having to deal with that are just tough. And it's okay to be human beings and say, this is a hard one, and we're trying to figure out what to do, and we're open to ideas. Here's what our plan is. That's leadership as well, is admitting that we're human beings and we don't have all the answers. We're open to input and feedback, and let's get through this together, okay? Sharing what's going on with your team can help build that trust from the previous issue we talked about. And then the last thing on here is accepting change when you don't agree. So there's a lot of political debate, religious debate, everything else going right now. We're talking election season. So there are a lot of different opinions floating around. There are issues with the media and how they handle things and what their incentives are, right? All of that is happening right now, and we're aware of that. So one thing that you cannot control is, once the federal government makes a decision and passes a law, then it's in effect. So you can either comply or not. And if you choose not to, then you're putting extra unneeded liability on your business. Now, some business owners may say, I'm fine with that and I'm willing to do that. And that is totally your choice. We at Thread definitely want to support business owners and help you make important decisions. We're not going to tell you what to do, right? But just be open to a little bit of change, because obviously it's coming and we're not stopping it. Change is good. It's okay. And think about how you can accept that even if you don't agree with it. Feel free to reach out and talk to us anytime. A message that I'm repeating here on this slide that Lori gave to our team that really resonated with me and a lot of us here at Thread is that we're stronger together, which means, for me, that even though we may have diverse backgrounds, upbringings, political or religious views, work ethics, everything else, by being open to our differences, accepting of those, embracing those, and saying, how can we leverage what's different about us to be the best team possible, be open to each other's ideas, lifestyles, and everything else, then we're stronger together, which means we're going to stay together, work together, and we are stronger that way when people realize that they're accepted for who they are. So if you have any questions about any of these issues we're talking about, and I know we're going to get to the questions in the chat in just a second, feel free to reach out to me directly or your account managers at Thread. We're definitely here to help you. If you need HR support, now is the time. Don't wait till all of this is over, because believe me, you'll be glad if you reached out and get a little help while this is going on. We're doing that right now with a lot of clients, and they really appreciate the extra person on the team. So we're here for you. Barb?
Thanks so much, Scott. I guess we are going to get started with our questions. Lori, did you have any that you wanted to kick off with, or should I just start asking?
Well, I'm reading the questions in the chat, and they're very similar to the ones that were submitted. So why don't we start with some of the submitted ones, and then I'll take it over and answer some of the ones in the chat that weren't addressed.
Awesome. All right. So first question, when calculating payroll, is the gross amount inclusive of taxes that is used, or the net amount for me getting the PPP forgiveness?
So for the loan amount and the forgiveness, it's based on gross payroll, and it does not include the federal employer tax, but it does include the state. So it's gross payroll plus benefits plus state taxes.
Okay. Scott, as we are rehiring, are we required to accommodate an employee if they live with someone with any of the CDC high-risk categories?
Well, that is something to consider. So the ADA, the Americans with Disability Act, protects people who have a qualified disability, who are treated as if they have a disability, and also who are caring for someone with a disability. So if you have someone who's caring for someone with a disability, you need to talk to them about, accommodations that are required. Usually that means sometimes flexible work schedules, things like that. If it's not a disability, it's just someone who is perfectly healthy but happens to be in a higher risk category by age or something like that, then I think you should still consider their concerns, because if someone says, look, my parents live with me and they're 75, 80 years old, and I don't want to come to work with 100 people and then come home and possibly expose my parents, because that's the age group where people could die if they get COVID-19. So it's a legitimate concern. And I would advise companies to consider that and see if they have flexible work arrangement options for those employees, even if it's a temporary thing until maybe we get a vaccine or whatever. If you're not able to provide then accommodation because it creates an undue hardship on your business, then that's something you can talk about as well. And there may be circumstances where you tell the employee, we're not able to provide this accommodation. We can put you on a temporary unpaid leave of absence if that's an option until we kind of get beyond this or something like that. So you just have to consider what your options are. Try to be creative if you can.
Got it. Thanks for that, Scott. Lori, clarification on if we want to go ahead and apply for forgiveness, say at 13 weeks, can we just prorate the maximum weekly salary limit of employees who make over 100K?
So it looks like you're choosing between 8 and 24. So it also, when you're looking at the 24 weeks, you're going to have your full-time equivalent. So here's a challenge. On the 24-week option, if it looks like you may have a lower FTE count over the full 24 weeks, and you were able to maintain, it was easier to maintain your staff over the 8 weeks, then you should probably choose the 8 weeks, because what I'm looking at, the way I interpret the 24 weeks is it's the full 24 weeks. Now, it doesn't mean that you're going to be able to spend your money over the full 24 weeks because you may have more payroll than you have PPP money to spend, right? Because you calculated it over 8 weeks. But you're going to have to use the full 24 weeks to determine your FTE count and comparing it to the reference period. So I think what you need to do is look at it both ways and see which one gives you the maximum amount of forgiveness. I really believe strongly that the 24-week timeline is, you want to pick that if you needed more time to spend the money because you had a greatly reduced staff. So in that case, 24 weeks makes more sense. If you were able to, it was more easy to maintain your staff through those 8 weeks and you didn't have an issue of that, then I would choose the 8 weeks. But as of right now, the way I look at it is the 24 weeks is you've got to pick the full 24 weeks. It doesn't mean you have enough money to spend on the payroll, but you may be able to spend 100% of it on payroll, which is fine too. You don't have to spend just 60%. You can spend 100% on payroll. But that 24 week, I think we need to look at, you need to look at it both ways and see which one gives you the greatest amount of forgiveness.
Awesome. And I think you just answered my next question, which was, given the move from 8 to 24, can we use all of our PPP for payroll? And that sounds like a yes.
Yes.
Awesome.
And then I saw a question here. Can the easy form be used no matter what your PPP amount was? That's a good question. What I have not looked at, and I will get an answer to this, I think you can, other than I'm not sure about the over 2 million, because when I looked at that form, I did not see the checkbox for over 2 million for the SBA audit, but I will go confirm that and we'll get that answer back to you.
All right, thanks. The next question is a Lori and Scott question, both, and it's got a little meat to it, so bear with me. If people are saying that they are still uncomfortable coming back to work, even after you've done everything possible, how long do you let them stay out before taking them off of the weekly unemployment form? We feel some are only saying they are comfortable so they can continue to receive unemployment pay, which is more than their pay at work. And I do know that, Scott, you touched on this a little bit beforehand, but that how long you stay out is kind of an interesting twist on it.
Yeah, and the unemployment aspect of that as well, and that's a good question. Once you know if someone has resigned their position, then you take them off your partial claim spreadsheet in Georgia. And for those of you who are not in Georgia, Georgia's employers are filing on behalf of employees for unemployment claims. So Georgia employers have a big spreadsheet with all their employees who are on reduced pay, reduced hours right now. And a lot of questions are floating around about when do you take people off that sheet or not. So they basically said a few things. One, if you know an employee is not going to return to work within 6 weeks, that's one of the things that's been floated by the Department of Labor in Georgia, then at that point you convert the claim from a partial employer claim to an employee claim. And at that point, the employee kind of takes over their weekly reporting and the employer doesn't do it anymore. If somebody quits their job, you can take them off the spreadsheet and you don't convert them, you just take them off the spreadsheet and they would have to file their own claim if they wanted to. If you have somebody that gets termed for performance that is non-related to COVID-19 in Georgia, you would still give them a separation notice and they would use that to file their own claim as well. If you think somebody is coming back and they're still working reduced hours, and let's say they're going to be back in a month, then I think you would probably leave them on the spreadsheet in Georgia. If you think somebody is going to be out for 6 months or more, that kind of thing, then maybe you convert their claim to an individual claim, especially if that's going to result in any kind of termination. But you really have to look on a case-by-case basis to see what are the circumstances around the separation. And I think if there's a short window where they're going to come back to work, then you probably leave them on the spreadsheet. But if you don't think they're ever coming back, or if they've told you it's going to be longer than 6 weeks, you could use that because that came from the DOL. I have submitted a question, I don't know, probably 20 times, basically asking for a time period when an employer is absolutely required to convert someone to the individual claim, and I have not gotten an answer yet. But I did have 2 conversations with state senators' aides this week who are saying they have a liaison who might be able to get me an answer. So stay tuned for that.
Oh, Scott, thank you for that. Lori, a lot of questions about the 8 and 24 weeks. Do you have one of the two? Can you
let me answer those. I'm looking in the chat. I know we had a bunch of questions submitted on that, and then the chat as well. So for example, this is a perfect example of a question. If you select 24 weeks, but you spend the loan proceeds in 17, do you have to wait until the end of 24? So it's a really good question because it's a big difference between 8 and 24. And you may have spent all your money before the 24 is up. But what I have read is that it is an either or. It's an either or. You pick the 8 weeks or you pick the 24 weeks. And if you pick the 24 weeks, it doesn't really matter that you can't fully fund your 24-week payroll with this money because you may have already spent it all on payroll and 100% on payroll. But you have to use the full 24 weeks from what I am interpreting and how I'm looking at this. You have to use the full 24 weeks when doing your FTE calculations. So the biggest challenge in my mind is if you were not challenged, the biggest reason to go to 24 is if you just needed more time to spend the money because your workforce was greatly reduced, your business was partially shut down. If, for instance, you did not have that issue and you were able to stay close to fully staffed, the good news is if you go with the 8 weeks, there's a couple really positives to that. If your business wasn't greatly reduced and you didn't have to drop a bunch of your staff, 8 weeks is probably the right way to go because you still have an FTE Safe Harbor that says you have to have been able to restore your FTE by the end of the year. So originally it was saying June 30th was the original 8-week restoration was June 30th. But the way I read it now, the Safe Harbor only mentions December 31st or earlier, whenever you were able to restore your FTE count. So if you went with the 8 weeks and you restored your head count by October, you still should be okay on the FTE restoration. That's the way I read it. The June 30th doesn't seem to be there anymore, even if you pick the 8 weeks. So there's a lot of questions on that. And I really think the answer is you've got to decide what's best for you. You've got to run the numbers both ways. And because there's no rush to get this application in, take your time, run the numbers both ways, and look and see what it looks like. If we've also seen questions about, hey, we're going to run out of our PPP money, but our revenue is greatly reduced. We may have to lay some people off again. Then it could be that the 8 weeks is more advantageous for that. If you feel like in 24 weeks, you're going to get back to where you were 100%, you can restore that FTE and even restore the FTE by the end of the year. 24 weeks just gives you more time to spend the money. That's the way I look at it. If you're able to spend it all in 8 weeks and you were able to stay mostly fully staffed, go with the 8 weeks. The positives are you get it off the books earlier. You'll also probably get a forgiveness answer faster because you're going to apply earlier. But I would look at both ways. And if you're a client of ours, we can run the reports both ways for you. And you'll be able to see what it looks like, what the percentage of reduction is going to look like. But I would hate to see anybody not get close to 100% forgiveness because there's just so much flexibility now, especially in being able to reduce your FTE count based on some of the things you're talking about, people not wanting to come back, people wanting to reduce their hours. There's a lot of flexibility. So we can help you one-on-one also. And I'll reach out, if you're a client of ours, talk to your account rep. They will reach out to me and I'll get with you and try to help you out on it.
Thanks, Lori. If an hourly employee's rate has not changed, but their hours have dropped, is that still applicable for the 75% rule?
So when their hours, the rate stayed the same, but hours dropped. You're looking at when you're looking at wages, you're looking at the hourly rate. But where the drop in hours is going to come in is when you're looking at your FTE count. because they are now, if they used to be an FTE of 1 because they were working 40 hours and now they've been averaging 20 hours, their FTE is going to be 0.5. So that's where that's going to affect you a little bit. My thought on that is, if that person can get back up to full hourly, their full hours, you have until the end of the year to do that. So I would wait on that and make sure that you can get those people's hours back up. If you feel like you're never going to get those hours up, you may end up having to take a small reduction based on FTE count.
There's a question that came in the chat. I feel like it also might have come in beforehand. Does the 2.5 month limitation for owner employees apply even if the employee owns 10 or 20% of a company?
Yes.
Okay.
Yes. All employee owners. I think it's over 2%.
Okay.
Barb, I see a question in the chat. Do you have any sample communicable disease policies we could use to model for our business that would talk about temperature taking, ability to send someone home, not coming to work and feeling well, etc.? I believe we have a sample recall letter and also a welcome letter and some return to work tools that you can use to cover that on our website. And then we can also, if anybody, when you get the follow-up email to the town hall, it's going to have a link to my calendar on it, and you can schedule that just by clicking the link and schedule a 15-minute, 30-minute call on my calendar. And if there's anything that you don't see on the website or that you'd like to see a sample of or whatever, we can talk about that, and I'll be glad to forward that to you or help you out.
Absolutely. And I'll link the resources for those recall letters and the other things that we put out before with this webinar as well.
Okay. I've got a couple in the chat, Barb, I'm going to answer. That's okay. Is there an alternate period for the 24-week option? Yes. You can use covered period or alternative covered period. That allows you, I also saw a question here about health insurance costs, and this goes to payroll as well for the alternative covered period. The alternative covered period, you can pick the period begin date that follows the first one that follows your loan funding date. So what that means is it would also expand past the actual covered period for that amount of time for the person's pay that was incurred during the coverage period but paid after the covered period. So the very next pay date may be after the covered period ends, but the piece of it that was incurred during the covered period, or the alternative covered period, will be included in that. And the same goes for, I saw health insurance, rent, all those types of things as well. It could be that it's incurred during the covered or alternative covered period, but paid in the next billing cycle, which may be after the covered or alternative covered period, and that is okay as well. So I know this 24-week versus 8 versus 24 week is confusing because I see so many questions on it. And the main thing is we just need to run it both ways. I would run it both ways. If you feel like you're going to maintain, you've spent all of it, you were able to maintain most of your FTE count. Those that you didn't, you will restore by the end of the year. 8 weeks is probably the easier. 24 weeks is still very unknown. My biggest concern on the 24 weeks is we've already seen by how many town halls we've done. And if I go back and look at the previous content, it's changed quite a few times. So the downside of the 24 weeks is we've got a lot longer for changes to be made that we don't know about. So if you can do the 8 weeks and get the majority of that forgiven, that to me is, and my support team, my ops team is probably going to not be so happy with me by saying that, because everybody's going to be jumping in to do the 8 weeks. And we're going to have to support that, but that's okay, because I feel like, we want to get this, we want our clients and prospects and everybody here to get 100% forgiveness. That's the goal of this. And, if the 24 weeks leaves a little bit open to interpretation for the SBA and the Treasury and everybody else that wants input. So the main thing on the 24 weeks, do you need more time to spend the money because you were not fully staffed? I think that is the main reason. Or if you pushed out your rent payments your landlord was really nice to you and pushed it out, and you need more time to spend the money. I think that's the key. Because now with the 8 weeks, you have until the end of the year to restore FTE count. So you may want to get the 8-week application done. And you get to use the easy form if you're doing the 8 weeks or 24 weeks if you qualify. So let's see. Is forgiveness via 8 weeks limited to the amount of the loan actually spent during the 8 weeks? Well, it is. I mean, it is based on the amount spent during the 8 weeks. It depends on payroll is incurred and spent. Other non-payroll items are incurred or spent. So there's a little bit of caveat on there, but you can pick the 8-week covered period or alternative covered period. So the key there is to get full 8 weeks worth of expenses, 2 months worth of payroll, and then 2 months worth of other expenses. Let's see. Any other items that you see as I'm looking through this, Barb, that we haven't answered on the submitted questions?
I think I know you answered this one. If they made FTE headcount but then had to lay off again, they should probably wait until they're back to FTE before applying for forgiveness, correct?
Correct. Yep.
And tips earned by employees were included as gross wages in the application and are listed as forgivable. At least that's what's being interpreted. Can you confirm this
Yep.
actually giving the employer credit for tips that were paid by patrons?
Well, that's a good question. The first question is yes, the tips definitely are included in what you use to apply and what you can get forgiven for. What was the second question?
It was just saying this feels like it's giving the employer credit for tips that were paid by patrons.
Oh, gotcha. Well, we use that money. I see what you're saying. We use that money. I think we did use tips to determine total payroll dollars. So, that's how the loan was calculated. And you are going to be looking at the tipped amount for how much the employee was paid when you're determining what the overall forgiveness amount is. So it is included. There's another question here. To calculate any reduction in FTEs, do I still have an option of which reference period to choose? Yes. You still have those reference periods of February 15th through June 30th of 2019, January, February of 2020, and then there's a little bit of a different one for seasonal businesses. And yes, there's still that you get to pick the reference period that you're going to use. Let's see. Barb, you have another one?
Please confirm the tax implications of the PPP loan. Are the overhead costs and labor costs paid by the PPP tax deductible or not?
Yeah, so the tax, I had this argument the other day with somebody that I was talking to that's a business owner in my neighborhood, and how to handle the accounting of it. And in that case, I was trying to explain it, but that is probably better explained by your CPA or financial advisor. But basically, the forgiven amount will not be taxable income. And so how you account for that in your accounting software is going to be, it's a unique situation for all of us. So that is not considered income. And also the expenses that you are using the PPP funds for will not be considered deductible expenses. So it's a wash, really, in my mind. You're getting free money and you're spending it. So you don't get income and you also don't get credit for the expense. That's how it is as of right now.
Okay. This one was chatted in. What support should we provide with the forgiveness application? And do we need to send documents showing that the PPP related payroll amounts have cleared the bank?
Yeah, so the documents are different depending on if you pick the regular or the easy form. The easy form, and I can send, what we should send out, we'll send out a link to these forms, Barb, for the documentation required, because they're a little bit different depending on which one you choose. Basically, you need your payroll company to create the payroll forms that you need. That's going to be showing those records from a payroll company will qualify for the payroll side of the forms. You don't really need to have bank statements and things like that. Now, it could be a little different if you're self-employed. If you're self-employed, company, sole proprietor, you may need more of that type of data since you're not running payroll per se. But if you have employees, the payroll reports are going to qualify. You'll want to have copies of your tax returns, your payroll tax returns, which you can get from your payroll company or us. And then you'll need something to show your FTE count. And that can also be, like for us, our forgiveness report should be able to give you all the data you need for the FTE count because it's tracking FTE. And the payroll reports will give you the data that you need for payroll, along with the forgiveness report. The only thing that you're going to need in addition to those reports will be rent payment statements that you paid and utilities and things like that, things that we don't capture. If you run benefits through us, the benefit side will be in there, but you will probably have to also supply benefit statements. And if there's also a piece in there that says you need to, this is real important. I think we have to hold these documents for 6 years. There's a piece in there that says to hold on to certain documentation to prove, if it's the easy form, you have to hold certain documentation to prove that you made offers of employment to rehire and employees refused, or reduction in hours. You don't have to submit those, but you have to maintain them. And so I would make sure that you're maintaining, because we don't know if 3 years from now, the SBA decides that, you know what, we're going to go, because there is an opening for them to come and look at documentation and ask for and collect documentation. So I'm recommending everybody maintain all of this information for 6 years, maybe forever. But any kind of documentation on employees that were fired for cause, terminated for cause, you tried to rehire and they refused. There's certain documents you have to hold but not submit, and certain documents you have to submit. The only way I would think you need to submit a bank statement is if you're sole proprietor, self-employed.
Okay.
Long answer, but I think it's so important. We all maintain the records in extreme detail, just in case. And Barb, can you put it in there that we're going to send out at least links to the 2 forms?
Yes, I've made a note. Okay, I don't have any more pre-submitted questions. If there were any more in the chat, I don't see any that we haven't really touched on, I don't think.
Yeah, just a lot around
8 and 24 weeks.
Somebody said, did you indicate that we have to exclude federal payroll taxes? And yes, that is not, you did not include federal employer tax when you applied for the loan, and you also don't get to include federal employer tax in the forgiveness amount. But don't forget, you can defer the federal employer social security, that's 6.2, until the end of the year. So to me, it's a free loan from the government. We don't have to pay any interest or penalty on that. So cash is king right now, and I recommend, if you need that cash, to defer those employer social security dollars, but making sure that you are accruing that, so you know that you are going to need to pay that, because then penalties will be extreme. Half of it's not due until the end of 2021, though, and the other half end of 2022. So that's a nice little way to have a free, no interest loan. The supporting docs with the application, I'll send you information on that. And the reference period for the FTEs, this was the last one submitted. You can choose between February 15th, 2019 through June 30th, 2019. That's one reference period. Or you can choose January and February of 2020, those 2 full months. If you're a seasonal business, you choose, it's a different timeline, and I cannot remember off the top of my head what that is. It's like February through May or something, but I will get that information back out. There's a different reference period for seasonal businesses. The way that you should do this is you should take all of those, especially the first 2, calculate your FTE and wages that way, and determine what is most advantageous. And again, in our system, you can easily choose those dates. So we are going to do for our clients, just so I'm going to throw this out there, I forgot to mention it. we're going to do a full webinar on filling out the application using our iSolve reports. And we will be able to show you how to run the reports a lot of different ways to make sure that you can get as much flexibility and forgiveness as possible. So look out for that. If you're a client of ours, we're going to show you how to run those reports differently so that you can understand that. And I think that's it. I think that's all I've got on the questions. Please tune into our next town hall and our webinar on filling out these forms. That's going to be coming shortly. We're also going to kick off a series about future of work. That's going to be pretty interesting. We're going to have some guest speakers talking about different things and how you can use not necessarily our system, but other systems to really help you manage a remote or hybrid workforce. So look out for that as well. And if you're not a current client of ours, we'd love to have an opportunity to talk to you. If you need help from an HR perspective, we're giving away scot-free. We're giving away scot-free for consultations, so you can book time on Scott's calendar. And we just thank you guys for tuning in today, and hopefully it's been helpful.
All right. Thank you so much, guys. And by the end of today, you will have a follow-up email with the recording, the slides, and a link to all the resources we've mentioned today. Thank you so much for joining us.
Thank you. Bye.
Bye.